Crocs is riding a wave of momentum for its trademark clogs and sandals this summer, and it once again played out in a big way in the company's latest earnings report. Crocs said this week that second quarter sales surged more than 93%. Operating profits more than tripled. Joining us for a dive into the world of Crocs is CEO Andrew Rees. Andrew, good to see you again. It's been a while. Take us through these results. How long could these types of growth rates, nearly 100% in terms of sales, how long could this continue?
Look, I think we are confident that we can continue to have very strong growth. We've had sort of 4 consecutive quarters of really extraordinary growth as we've emerged from the pandemic, as the consumer is back out shopping both online and in store. We guided to the rest of this year to the full year being 60 to 65% growth. Look, there are some quarters, like particularly the second quarter, where you are seeing a trough in the compare numbers, but we are confident that we will continue to grow, very strongly into the future. Really driven by the brand momentum. The brand has very strong momentum. It's connected very strongly with consumers, particularly younger consumers. And we have a big market potential that we can go after, both here in the U.S. and also in the rest of the world.
Andrew, give us 3 reasons why this momentum in the business. Why are you seeing a new generation of Crocs wearers emerge? What's driving them to the stores?
Yeah, that's a really great way of thinking about it. So number one is the core DNA of the brand. So it's comfortable, it's easy on and off, it's lightweight, so it's very easy to wear, and it appeals to that major comfort trend that's going on. Number two, we add a great deal of excitement and inspiration to the brand through the collaborations, which you see on the wall behind me, through all of the social media marketing that we do, and we really engage our consumers, and we make it a fun brand to participate in. And our brand values are very compelling for those younger consumers. We also announced just recently net zero carbon emissions by 2030, which is very important to that consumer group. We're a great value, right? So, our typical shoe costs about $50. We're not asking people to mortgage their firstborn to buy a pair of our shoes. And in fact, we really want the question to be when somebody's shopping is how many colors am I going to buy versus which one am I going to buy? And then I think thirdly, is the international nature of the brand. We are already in 90 countries around the world, so we're penetrating into those markets, but we have a lot of runway for growth in many of those markets.
Hey, Andrew, it's Julie here. The first reason you mentioned is why my kids are devotees of Crocs. They're comfortable, they're easy to put on and take off, etc. I do have a question about price, though, because, my kids are 9 and 12. I've been shopping for Crocs since they were walking effectively. And maybe you view them as a good value at $50 a pair, but for quickly growing feet and for someone who's been buying them for a while, the price has definitely gone up over the years, and not just in the past year that we've seen inflation. Are you seeing any kind of resistance to price increases on the part of consumers?
No. In a word, but obviously let me just correct a couple of things. So the adult price is $50, the kids price is much less, obviously, because it's a smaller shoe. And as you pointed out, they only last so long. But one actually wonderful thing about Crocs is they do last a long time. And so part of our sustainability efforts is we're actually looking at re-commerce and reuse. So that would actually be ideal for those kids' shoes. We want to encourage people to find a next home and a next life for their shoes, and we'll be providing some vehicles to do that. But your core question in terms of price resistance, we really have not found any price resistance. We look very carefully at price. We think a core value of our brand is the democratic nature of the brand. We want it to appeal to a very broad range of people, and it does. And we don't want to make sure that we never have price as an obstacle to that. So we do look at that very closely. But also from an investor perspective, we want to make sure that we're capturing the value that the brand deserves, and we're able to return that to our investors.
And Andrew, staying on kids, you guys talked about it a little bit on the call, but we're on the leading edge of it, and maybe we don't have a full read, but certainly back to school is going to be an interesting time for all retailers as we hope to head into a normal school year. What are you guys seeing there? And maybe another way of asking, was there also a stock up into the summer season, which, for most of the U.S. at least, is going to be a little more friendly to daily Croc wear than the winter months?
Yeah, we certainly. So let me take the second piece of that first. yes, we certainly saw a stock up into the summer season. We saw some of our, I would say kind of resort type of locations, so places where people particularly will drive to go on vacation, whether it be, the Panhandle or Myrtle Beach, et cetera. We saw really strong performance in those kind of places as people were desperate to go somewhere and desperate to also consume and shop and go out when they were in those kind of locations. So I think there was a stock up into the summer period. And also aided by stimulus, right? As we go into back to school, we are seeing, very strong reads on back to school. We think back to school will be strong across the board, but I think particularly strong for Crocs. And it's been a really important part of our growth story is actually de-seasonalizing the business, building a much stronger back to school business and building a much stronger fourth quarter business. And we've done that and taken a lot of seasonality out of the business.
Andrew, what's your next big partnership?
So we have a ton of them, right? So the collaborations that we do, the partnerships that we have are really, really important to our brand. You can see some of them on the wall behind me, and they could be everything from KFC. We recently did Balenciaga, which was our second collaboration with Balenciaga, the high fashion brand. But we also did in the last quarter, we did Nongshim, which is a famous South Korean noodle brand. So we do a wide variety. And major celebrities. I think you've got Bad Bunny up there on the screen. I would say we have a significant number of collaborations planned for the remainder of this year and into next year, as diverse and as exciting as the examples I've just given, but we're really careful about not revealing those ahead of time.
I've got my eye on the spiky pink ones over your shoulder there, Andrew. Sorry to come back to price, but I want to ask another question related to that, which is about input prices and whether your guys are going to continue to raise prices. I imagine oil, one of your major input prices, oil prices have been on the rise. What's that going to do to margins for you guys? And are you going to continue to raise prices of the shoes?
Yeah, look, I think we believe that we are in an inflationary environment, right? So I think we're seeing that in the numbers. And we think that was sustained for some period of time, that costs are going to rise. It's less, frankly, around oil, and it's more around labor and transportation. So you could say that some of the component of the transportation was oil, but the input, the raw material that goes into our shoes is oil derived. But that's really a very small part of the cost. The biggest part of the cost is the labor that goes into making it, the labor that goes into selling it and distributing it, et cetera. And so the cost pressures that we're seeing are really labor costs, and I would say transportation costs, so global logistics, so container rates, outbound shipping, those costs are all rising. But we're not changing our pricing to reflect cost, right? We're looking at our pricing from a market-based perspective. We're looking at it based on competitive pricing. So where are our competitors? What are the sensible alternatives that the consumer has? And what we think represents a really good value for the amount of design and equity that we put into the shoes.
I think I'm with you, Julie. I like those spiky shoes behind Andrew. Maybe in black, not in pink, but I kind of dig them.
We have both.
All right, we'll leave it there. Crocs CEO Andrew Rees, always good to see you. Good luck this quarter.